Warren Buffett has gone from calling this industry a death trap for investors to buying 4 stocks worth almost $10 billion. We're going to look into why the Oracle of Omaha now loves this industry and my 2 favorite stock picks. We're talking the Warren Buffett portfolio today on Let's Talk Money. Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in our community. Thank you for taking a part of your day to be with us. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, the Warren Buffett portfolio includes just 42 companies for a total of $196 billion, and it's surprisingly concentrated in just a few industries. Now, if you follow Warren Buffett in his investing style, that lack of diversification, those big bets in just a few companies, shouldn't surprise you. Buffett has said that he thinks diversification is bunk and that it only holds your portfolio back from those larger gains on your best investments. What will surprise you, though, are some of the investments Buffett has made. In fact, he's gambled more than $9 billion on just 4 companies, and it's got a lot of analysts scratching their heads. Buffett took the lead of the Berkshire Hathaway holding company in 1965, and it's rewarded investors ever since. Returns for shares have climbed 20% a year over the last 38 years, more than doubling the return on the broader market. And that means instant market buzz anytime the company files its 13F. That's the disclosure all large money managers have to file every 3 months. Now, that look into Buffett's investment is what we're using for this video series on the Oracle of Omaha stocks. We're looking at Buffett's biggest investments, his favorite industries, and even his worst investment he's made. We'll look at the stocks Buffett believes in, why he loves them, and how you can use all this to find your own investments. So subscribe and click on the bell icon to get notified when the rest of the series goes live. I'll also be putting a link in the video description below to a special playlist with all the videos. But let's get back to one of Buffett's most surprising investments. He's put almost 5% of the portfolio in an industry that has really always been trouble for investors. In fact, as recent as 2013, he was calling this industry a death trap for investors. At the 2013 shareholder meeting, asked if Berkshire would ever consider adding another airline to its investments, Buffett warned that the industry was a labor-intensive, capital-intensive, largely commodity-type business, and went on to say it's been a death trap for investors ever since Orville took off. Now, despite all this and almost losing his entire investment in the U.S. air investment in the late 80s, Buffett started buying airlines in late 2016. Berkshire now owns a major part of the big 4 U.S. carriers: Delta, Southwest, United Continental, and American. So what does the Oracle of Omaha see that other investors don't? And is there still any room left in the returns to these stocks? Now, Buffett has said that airlines have learned to operate with more discipline and are no longer adding capacity through huge fleet buying and new routes. He's right here in that capacity growth has come down, mostly through consolidation in the industry. Obviously, the plunge in prices for jet fuel, that single largest expense for airlines, hasn't hurt either. And Buffett has done really well over the last 2 years through the beginning of 2018. The industry ETF, the U.S. Global Jets Fund, that symbol JETS, has surged over 40% versus a 30% gain on the broader S&P 500. As for a long-term investment, though, has the tailwind come out of the airlines? Since the beginning of 2018, that ETF fund has fallen 11% compared to a flatter broad market. Energy prices are back up and some cracks are starting to show in the airline's financials. So let's look at the industry and why I think you can still make solid returns in 2 airline stocks in the Warren Buffett portfolio. Even with a recent agreement among OPEC to increase production, geopolitical worries like the unraveling of the Iran nuclear deal, as well as generally good global economic growth, are likely to keep oil prices higher. Now, that's bad news for an industry that books a large part of its operating costs for fuel. The IATA forecasts fuel as a percentage of industry operating costs will rise to 20.5% this year from just 18.8% in 2017. Now, against that current pessimism on higher fuel costs, there is reason to believe the worst is already baked into those shares, and there are a couple of airlines that stand out as good investments. The Bureau of Transportation Statistics reports revenue passenger miles for U.S. carriers is up 4.8% in the first 3 months of the year versus 2017. That's a solid gain as seat miles has stayed fairly consistent. Now, revenue freight ton miles for U.S. carriers has jumped 7.4% on a year-over-year basis. And this is from a lot of those tightened regulations in trucking, and a driver shortage is really benefiting air carriers, and it's a trend that should continue over at least a couple of years. So even if higher fuel prices take some of the boom out of airline stocks, there's still some good reason to be bullish. So let's look at a couple of my favorite stocks, two that Buffett happens to own as well. I pulled data from the Bureau of Transportation and Bloomberg to look at major US carriers. In terms of passenger growth, Southwest and United have really pulled out ahead, though passenger yield, that's a measure of passenger profitability, is very low for United. I love American and Southwest commanding lead in the market share, as well as strength in that passenger yield. So American Airlines, that's ticker AAL, is my top pick among the major carriers. Profitability took a big hit last year when wages were increased significantly, and management has already acknowledged higher fuel prices with a cut to its earnings target for the year. Taking the wage hit last year could mean less pressure in 2018, and margins could surprise to the upside. American Airlines has one of the newest fleets in the industry with an average fleet age of just 10.1 years. Now that's going to free up cash flow to be returned to shareholders and help the company improve its balance sheet. Now shares trade for just 8.6 times trailing earnings, one of the lowest in the industry, and analysts expect profits higher by 9% to $5.48 per share over the next 4 quarters. Despite slower passenger growth over the year through January, the company still commands the largest share of the market, and a turnaround in profitability could drive very strong results. Southwest Airlines, that's ticker LUV, has one of the best records for customer satisfaction, and that's going to help it weather the recent incidences around equipment failure. Now, the company is one of the few to escape bankruptcy over the last few decades, posting 45 consecutive years of profitability. Southwest holds the second highest share of the domestic market and has experienced strong passenger growth over the last year. Southwest has also recently modernized its fleet to an average fleet age of just 11 years. That modernization has helped increase the average seats per aircraft and lowered operating costs with an increase in average seat miles, that's ASM, per gallon of just 5% over the past 5 years. The company has also one of the strongest balance sheets in the industry and is one of only 3 major carriers with an investment-grade debt rating. Shares trade for 14.6 times trailing earnings, which are expected 26% higher to $4.60 per share over the next year. Even with the sell-off this year, Buffett has done very well on his airline stocks, but he's not without his bad calls as well. In fact, he sold out of one investment last year, losing almost $1.7 billion. In the last video in our Warren Buffett portfolio series, we'll look at this investment and where it went wrong. Click on the link in the video description below to watch all the videos in the Warren Buffett playlist, and don't forget to subscribe to the channel. We're here Mondays and Wednesdays with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about investing or money, just scroll down and ask it in the comments.